This I had in my last presentation. So what I will do now is I'll comment a bit about our strategy as it is. I will try to reflect a bit to give you a flavor of, after we launched the portfolio-based strategy, what has been working well and where can we do better. And given our new and added aspiration, that I will go through what elements are we now adding or changing in order to execute our strategy going forward. And then afterwards, obviously happy to take questions. So just to recap, we are a multi-oil ingredient house based on plant-based oils and fats, on a journey towards higher value and impact. All right? We're gonna go through trends, market outlook, our strengths, how we can utilize the opportunities and manage risks that we see, as well as the updated strategy. Some of you have seen this picture before. Why do I bring an old picture when we talk about trends? Trends are here and now, right? Yes, they are. And we just talked about in the Q&A about some of the short-term trends. What about stocking, destocking? What about down trading or something like that? Yeah, that's the short term. That can come, that can go, that can be in the next cycle as well. What if we raise above a bit in the helicopter view and we look at consumer trends? We still see health and well-being being really there, right? Sustainability, more sustainable supply chain of food or other products. Premiumization. So what is premiumization? It's when I go and buy something, I buy something that is slightly better than what I could have bought, right? Works a bit against down trading, right? So what is short term, what is long term? What we can say that nothing through COVID, nothing in the current environment is taking away the long-term trend on health, nutrition, well-being. I would argue that nothing in what we see now is taking away the need and the focus on sustainability. I think it is fair to say that in the short term, and also looking at what came out of the last COP meeting, I think it's fair to say that as a world with consumers having to live with energy prices, interest rates going up, inflation, is there a risk that we take a step back or slow down a bit of the consumer-driven behavior in this area? I think that it's fair to say yes. But I don't think that we will ever, as policymakers or companies, banks, investors, and consumers, I don't believe that we will say that, hey, sustainability is not important. I think we can all understand, and we're educated enough to understand, it is key. We just got to find the right levers, right? So long term, we see sustainability being very, very there now as well with regards to how we look at the future. And then premiumization, convenience, all plays into how consumers consume food or personal care products, etc. Right? So I'll bring this in a bit of context as we go forward. So what does that mean for the plant-based oils and fat market that we are part of? We see that the market continues to grow as a whole, low single digit, 3% plus minus. But we do see, and we've seen that before, that the specialty part of that market, where we strategically want to play an even more important role in, we see that that is growing slightly more. Difficult to say if it's 4, 5, or 6, but we see clear evidence of that being the case. There are opportunities to grow slightly faster than that. When we bring it down to, when we take these trends and we look at that from an AAK perspective, maybe not remarkably, but still, sustainability, use of more natural, health, cuts across almost all customer segments or industries that we deliver to. In a slightly different manner, but certainly sustainability and health is present in chocolate and confectionery, special nutrition, the plant-based food sector, or bakery, dairy, food service, personal care, or candles, replacing fossil-based ingredients with something better, more sustainable. When you come to indulgence or premiumization, it's not across the board, right? That is a bit more selectively with the CCF, with bakery, special nutrition. We spoke a bit about China before. There's a clear premiumization trend, you want to buy something better for your baby. It is there. You're spending more money. Even with declining birth rates, the market has been increasing in infant formula in terms of value spent in China. So this is what we then have to use as insights for us when we navigate, when we focus on innovation, when we focus on how to co-develop together with our customers. How do we bring value given the trends that we see? But I do think with our position, being a multi-oil ingredient house, having access to different types of raw materials, being able to, with fat chemistry knowledge about our customer's product, being able to take what's needed and bring that to our customer, a strong value proposition, a strong solution. Be that for something that is healthier, or be that for something that becomes more premium, or be that with the same product, but with a more sustainable supply chain as a whole when it arrives to the consumer. So what are some of the strengths that we have? Thomas has articulated this a bit, so I will not dwell too much, but we have a strong performance. We have a solid profit growth driven by two important elements, volume being one of them, and our margin, operating profit per kilo. So we have had, and we will continue to have, and we will even strengthen the focus on the margins, making sure that we deliver high value to our customer. But the formula has served us well over time, and we clearly have the ambition to continue this path. Coming back a bit to our position, so why do we have a strong position? Being a multi-oil ingredient house with expertise in what we do, having access to a lot of different oils with different characteristics, we are able to be a go-to partner for our customers. We are able to formulate and blend to achieve functionality, sensory experiences, or a more sustainable solution than what used to be. If we look at that a little bit, so what am I talking about when we speak about what is fat chemistry? What is it that you do, right? And there is a lot of different needs in products. Some products needs to be crisp like a chocolate. Something needs to be spreadable on your sandwich. Something else needs to deliver nutritional value or even a high fat content for babies that we just talked about. So when you look at that, there are different types of fats. There are different types of fractionate, produce oils and fats, blend them together to arrive to specifications, functionality that delivers sensory or can be efficient in our process or more efficient in our customers' processes. So there's many levers that we can help a customer with, and that is of course where we focus. I think, and I sometimes joke about this internally, I think that some consumers or maybe investors, analysts speak about fat as one ingredient, but it isn't. There are thousands of different ways of arriving to an ingredient that makes a difference in a product. And that's why we call ourselves a multi-oil ingredient house. We have also a link to this, being able to serve different industries, different needs. We also have a large customer portfolio. So this is just to show that with this base, we're not limited to one or two, three dominant customers that we live and die with. It's quite a big spread for AAK. And with that, let's move into the segments. And I know this is something that is appreciated to talk a bit more specifically about volumes. So clearly, CCF is a big market. There is a lot of oils and fats in a chocolate solution. Bakery is another big market. Industrial and food service, this is a bit of a mix because there's a lot of food service volume in this one. And then you have dairy, feed, special nutrition, etc. This is how the volume is distributed within AAK. But the real message is that we have a lot of legs to stand on, because clearly there is a difference here in profitability also, and the opportunity to deliver high value added products. So just because there is low volume, I think you all know that within special nutrition with slightly lower volume, the high quality need of oils and fats is higher, and the pricing point and the opportunity to capture that is higher. But how has this developed over the last year? What are the consequences of trends and behaviors and consumption? We can clearly see that chocolate and confectionery has continued to grow. 4%, yes, but that includes Russia, which is a big chocolate market. And as you know, if you followed us, we have decided to exit Russia. If you look at that on a comparable way, like for like, then it's growing by 12%. Right? We have seen in food service and industrial, this is more of a post-COVID rebound effect, more than anything else. And then you see slight decline in special nutrition, falling birth rates in China and so forth. But we saw in the last quarter, if you followed us, that we were increasing our profits still, so kind of a bit of a pickup there. You can also see candles. Thomas commented that. If you were here with us last year, you saw the candles was up, if I remember correctly, 75% year on year. So real boost in candles, driven by one, replacing fossil-based ingredients, but two, the COVID effect of people being more at home. I think in Sweden, we use candles a lot, but we saw in other regions like the US, you started to use more candles. There was a real COVID boost also into candles. A slight setback, but we still believe in the trend, replacing fossil-based ingredients for more sustainable ingredients. And I'll come back to that. So I promised to comment a little bit about our portfolio-based strategy that we launched 3 years ago. So in order for us to be able to articulate and be specific, selective, instead of serving one for all, we said that let's break down our strategy in a portfolio so that we make sure that we target the right actions by industry, and with that become relevant and being able to prioritize. We have done really well in chocolate and confectionery with a strong underlying market growth, well positioned. We haven't necessarily done so bad in special nutrition. We're very relevant in the market. We have a strong position, but it's been a declining birth rate in China, an important market, and it's been higher competitive intensity in the market, so putting a bit pressure on the prices. So we're not satisfied with the earnings contribution and focused on improving that. We have optimized a lot in bakery. You've heard a lot about that. That is really living this strategy, looking at the product portfolio, contract management. We are closing one plant, consolidating 3 bakery plants in Europe into 2. So taking internal decisions and optimizing what we deliver, including targeting the high value-added segments within bakery. So we're not leaving bakery at all. Might have been a misperception. We're optimizing how we go to market in bakery, how we focus on the right type of fats where we can make a difference. And we have really stepped forward in plant-based food. We're about to open up a center of excellence in the Netherlands. As a market, plant-based food is now somewhat in a slowdown in penetration, but we expect it to really pick up if we take a 5 to 10 year perspective. We as a company has really stepped into this. We're more active than ever in the market and in new projects. So it's all about the penetration and the growth of the market as such. In essence, you could say that in all quadrants of the portfolio-based strategy, we have delivered increased earnings. But as expected, in some of the, when you click one level down in every quadrant, there is areas where we perform better, and there are areas where we have performed worse, or we can do better, living our purpose. And that's, of course, how we focus going forward. So with that, let's move into what we then do going forward, updated strategy. First of all, as a company, as a management team, the executive committee of AAK, and with the support of our board of directors, we have set a 2030 aspiration, targeting a doubling of our value creation per kilo. So we want to go from where we have been to a much higher margin, right? But we're not leaving growth behind. We need volume, right? And we articulate that we also need to be recognized for an increasingly positive impact by our stakeholders. Be that from a sustainability lens, be that from a shareholder value creation lens, or be that from an employee lens. Right? If you do the math, increased earnings, operating profit per kilo, and volume leads to absolute increase of earnings. So yes, we are targeting to continue to grow our earnings going forward. But we want to do it in a way where we put a focus on higher margin, higher value-added solutions, more value creation to our customers. Because it is important to have good margins to support continued investments, to support continued M&A activity, etc. Right? I am not satisfied with the absolute EBIT margins that we have today. We can do better. And now we have set an aspiration targeting that. So we are on a journey towards higher margin going forward. Recognition, that's not just about results, right? So that speaks into shareholders, that speaks into customers, our planet and society, and last but not least, our people. And why do I speak about recognition? We talked about it a little bit before. How can we make AAK come across to customers, to potential new employees, to more stakeholders, to more investors, and with that create the right and relevant recognition for AAK? That's an important journey. We have been a bit unknown, and we're going to tackle that one. Let's make sure we get recognized, not storytelling, recognized for what we do, recognized for what we do well, and of course recognized for areas where we can do better. A true reflection of AAK going forward. We have also updated our portfolio strategy in order to articulate what does it take, what do we need to change to better deliver on an aspiration towards higher margins and a continued volume growth. One is that we put health much more articulated in invest for future growth, not just special nutrition, but health as a whole. So we're going to invest further in that segment. We're also targeting new food solutions in a more explicit manner. I think you can all agree that if you are a plant-based oils and fat company, of course we are focusing on plant-based opportunities, meat and dairy alternatives, and we have invested in that. And we have Niall here, heading up that, and will be part of the fireside chat. But there's so much more in this. I think some of you have heard about precision fermentation. What's that? Cultivation or power to food. There are possibilities already today. There are technologies today that can produce fatty acids, fat that you could use in food. The question is, what's sustainable? What's commercially viable? What's going to be affordable to use and to consume by consumers? Our promise is that we are going to be in it, we're going to be close to it in a way that we can monitor and decide for AAK when we invest in a technology in-house, or when we partner up with someone, or when we maybe buy a different source of oil, fat, in order for us to continue to use it in a downstream position. And that is what that is all about. We're also moving technical products and feed and personal care into a bet for the future. Now, we have been in personal care for a long time. It's been a nice business. It is a nice business. But we clearly see a common theme about replacing fossil-based ingredients or mineral oils, where we see that clearly in personal care. We see it clearly in candles. But we think that there is an opportunity in other applications where you today use a fossil-based oil. Is there a possibility for us to help that industry replace it with something more sustainable? And that's a bet that we're taking. We're going to invest resources, capacity, and capability to target that. We need to do our homework, we need to do our research, but we do believe that there is a strong trend that will not go away for other industries to continue to replace. So those are some of the changes we're doing. We're not changing the optimize for future value creation. We're going to continue to do that bakery, dairy, food service. But we are investing a bit more in some of these trends that we see around new technology, around replacing fossil-based ingredients, and the focus on nutrition and health as we go forward. To click one level down on personal care candles and other applications, It's a bet on the shift. It's a bet on a reformulating opportunity, maybe for the exact one-to-one replacement or something that just makes it slightly better or slightly more sustainable. What that will lead, we'll see, but we're going to target that. Speaking of technology, I mentioned plant-based fermentation, cultivation, power to food. When we speak about plant-based as an industry, we speak about the industry about replacing meat or alternatives to meat, alternatives to dairy, but we also include new food, a mix of something that is just more and better, more sustainable, better. When it comes to fermentation, cultivation, and power to food, what we do today is that we invest, for example, in Big Idea Venture, who in turn, as an accelerator, a venture capital company, invests in new technology. So through them, we are close to new technology. And through that, we also invested directly into the Power to X technology through an investment in Green On. Why did we do that? Because Green On has a way of producing fatty acids based on CO2, energy, and water, a small amount of water. Quite interesting. Is that an opportunity to produce edible oils in a more sustainable manner going forward? Yes, maybe it is. And the same thing with cultivation. Is it possible today? Yes, it is. We want to stay close because we want to monitor what happens. We want to stay close in order to see what we can use as AAK, either internally or something we buy in. And that leads us to the next page. So what is the option that we have? What is the position that we can take? With new technology, we can enter into innovation partnerships, and we have a few activities ongoing on that arena, so that we stay close to technology, partner up with other companies that leads the way, and together we make better solutions. Or we actually invest internally. We might acquire a new tech company if we see that that fits our strategy going forward. Or we stay downstream and we source from large-scale producers with new technology. So again, we are not locked into one single plant-based oil or one single plant. We source oils and fats for applications. And if this enables a new technology to be there, like Power to X, then we can source these edible fatty acids and then formulate products to our customers. When you look at the strategy going forward, what runs across all these quadrants, or the 4 quadrants, is that we are investing in higher value opportunities. We are trying to really truly differentiate AAK from competition. Put innovations to market that helps us stand out from the crowd. We are optimizing our core, a smarter and better core, more efficient, lower cost, better sustainability throughout. And we really want to drive impact. So trying to combine this is what our strategy is all about. Thomas mentioned M&A. I'm not going to repeat that. You said it very clearly. But of course, M&A is an opportunity for us to accelerate our growth, to enable acquiring technology in-house, or expanding our product portfolio by investing in adjacent product portfolios. So M&A clearly on the agenda going forward. So with that said, why should you either stay as an investor in AAK, maybe consider increasing your share in AAK, or why would you enter in as a new investor into AAK? Well, some of the things that we've talked about today is strong underlying growth drivers. Nothing is a given, we all know that, but there are some quite interesting drivers where our opportunities are great with our plant-based oils and fats focus. We have a strong balance sheet for continued growth. Call it, we have a few levers at hand that we can use. We are certainly targeting above market growth, certainly when it comes to earnings growth, but of course also with volume. And with that, we are keeping our target about increasing our earnings by 10% year on year. Given that ingredient list that I talked about, right? Focusing on value added, really being relevant in the markets, topping it up with M&A, technology, adjacent product portfolios. And last but not least, we have a purpose of making better happen, which has the potential, or it's more ambitious than best. If you set out to be best, you can always, or you have to compare yourself to someone. But if you set out to do something better, you can, even when you're best, do something that is clearly better tomorrow than it is today. And that is something that we really try to focus on with our team, to always stretch everything that we do. In every business review, it's easy to say, yeah, but is it better? It might be realistic, but is it better? Is it better than last year? How is it changing AAK? And that's something we really try to live with, and that's the beauty in our purpose, making better happen. A quite simple one-liner, but it is so much underneath that helps drive and operate a business. Better employer, better sustainability, better solution for our customers, and hopefully, if we play this right, there will be better returns for our shareholders. Thank you.
Thank you, Johan. A lot of things going on here. Let me see if I get it right. First of all, a question to you directly about components. What are the components that will make you reach the aspiration of doubling the EBIT per kilo? Is there a plan in place?
Yes, there is. And to be honest, it's a plan in making, right? Everything is not one and done. So what's really clear now, I hope, is that we have put a clear aspiration. I think that we as AAK have been, if anything, slightly more short-term than long-term in some of our decision-making and some of our processes. So we have said we really need to make sure that we make investments today that can enable something going forward, right? So when we build our updated strategic plans, our 3-year business plan, our next year's budget, it needs to include the elements that will help us target higher value, right? So when asking for the ingredient, I think it is actually a combination of what I talked about before. It is combining a focus on margins, contract management, bringing value to our customers so that we can, price our products and with that also focus, product portfolio management, selective in the segments that we serve. So bakery, good example. If you just serve the whole bakery industry, there's a lot of commodity volumes. Do we need to compete for all of that, or can we stay focused on the ones with more value added and then topping it up with M&A?
We'll see if the people here are happy with that answer. Johan, any questions from the hall? Yes. And we will mix, of course, between the ones who are online and from the hall. Yes, please.
Thank you. Oskar Lindström from Danske Bank. Thank you, Johan, for the presentation here of the updated growth strategy. There were a lot of very interesting sort of different growth legs in here. I wanted to ask to what extent you see efficiency and cost reductions as a important factor in achieving this sort of doubling of EBIT per kilo in the coming years. I mean, we saw quite a big impact from that in the third quarter. Is this going to be an element also going forward?
Yes, and I think I'll for the benefit of that, I think going back to this one, because of course sometimes when you document something like this, you want it to work in many ways, right? So Johan, what do you really mean by optimize to create a smarter and better core? Well, that is a bit what that is all about, right? So what we have said clearly now, without spelling it out here, that across the sectors that we serve, which we actually serve with a footprint of production facilities around the world, we've said that it's extremely important that we work on productivity across the board in our factories, but also on our SG&A, in how we go to market, in how we co-develop with customers, right? We need to be very competitive. Just because we target higher value-added segments doesn't mean that we can be complacent and allow a high cost base, because our industry doesn't allow that, right? So thank you for the question. Yes, we have a clear focus on productivity and optimizing the core, meaning that, mature industries that we serve with our assets, like bakery, dairy, chocolate and confectionery, we need to be very productive. We need to be very efficient, even if the call it market opportunity is higher, for example, in chocolate and confection or special nutrition. We need to work on productivity and cost performance also in special nutrition, even if margins are higher. So that actually runs across and is an element going forward.
Thank you. If I may, a follow-up question on this. Given that your aim here is to double EBIT per kilo, considerably grow overall EBIT, and you're talking about these sort of efficiency opportunities, should we expect return on capital employed to increase in the coming, until 2030, for example, from where it is now, sort of in line with these earnings growth targets? Or are there reasons why EBIT per kilo should remain sort of in the 14-15% range where we are at the moment?
So I think very relevant question. Right? It's a little bit how we choose to, together with, of course, decisions from board of directors. How do we choose to play this going forward? If we are able to squeeze out a bit more volume, increase our margins, and drive with that EBIT per kilo and absolute EBIT, of course, if we keep the asset base slightly fixed in that context, our return on capital employed will go up, right? But that is not our main target. We also need to continue to grow, right? We will make acquisitions. We will make investments in capacity, greenfield or brownfield, that, when you start, it's a drag to your, return on capital employed. So I think you should rather look at it as, let's stay where we are and then hopefully being able to improve it, but rather in a journey of a continuous growth, our focus is going to be on driving margin and volume, and of course be very, very careful and drive cash flow. So ambition to increase it, yes, but the main target is to drive earnings growth and margin.
Thank you.
Okay, submitted question here. This one is for both you and Thomas. How should we think about volumes going forward? It's been declining for the past few years.
Well, declining for the past few years, I'm not so sure if it is, but certainly we can say that it has been declining this year, partly due to us exiting Russia, as we said before. So if you adjust for that, I would say it's flat to slightly reduced. But keep in mind that in Europe we are closing one bakery plant, consolidating to two. We have worked heavily. Bakery, as you saw, is a high volume segment where we're optimizing, meaning we're prepared to leave certain product segments or customers if the profitability isn't right. So not overly concerned with that. But of course, we cannot execute on this strategy without volume growth. It is important. We have big assets, big factories, refining operations. We need volume. We cannot be without it. So we need to be careful. We can just not step away from everything that is below par in profitability. We need to see it as a journey where we optimize margins over time.
Okay. Yes.
Yes, Daniel Levin at Nordea Markets here. So I'm thinking about your plan here to reach a doubling in EBIT per kilo to 2030, and then also you talked about growing faster than the market, and premium side was growing 4 to 6%, something like that. If I do a quick calculation there, it seems like EBIT growth is then targeting to be a bit above 10%. So is that really what you target up to 2030?
Yeah, we haven't put it like that because it's not a new financial target, not broken down like that. It is an indication of where we're heading, and it's clear that we see an opportunity to strengthen earnings per kilo, and we see a need. So back to what I said before, in order to facilitate new investments, facilitate growth, you need to have strong margins because your business cases will be better. It's easier to accelerate that. So if we are able to execute a higher than that growth of earnings per kilo, we would applaud that every day of the week. Right? So extremely important that we increase our margins, but of course to deliver on the absolute target, you need some volume as well.
Okay, great. Then one question again, and going more into details on how you see that doubling in EBIT per kilo between the different divisions. So looking at year-to-date development, the technical products EBIT per kilo has been growing the absolutely the fastest of that. So I mean, maybe you can talk about in terms of those three, where do you see the biggest moves when you reach that target? Is that going to continue to be a technical product, or perhaps you think about lifting it also in the other divisions?
Absolutely, a great question, and I guess my answer risks being slightly political almost in a way, but I'll try to be precise in this. So some of the drivers in technical products and feed recently will continue, meaning the trend on replacing fossil-based ingredients. That's an opportunity for value creation. At the same time, we have a bit of crushing in Sweden, where crushing margin has been great, so that has been a bit supportive, typically in the market dynamic that we had in the past. That might not be repeatable one-to-one going forward, and there's been a few other movements. So some of the increase in technical products and feed, you cannot just expect that to continue. On the other hand, we have had a weaker special nutrition market with high margin business, lower birth rates, etc., where now raw material prices has come down a bit. Our competitive opportunity to be more competitive is better. And who knows, in a 23 to 2030 time frame, when also birth rate starts coming up again. So clearly, ambition-wise, is to grow margins in CCF special nutrition, as well as continue to optimize bakery, dairy, food service. Done a good job so far, especially in bakery, but more to do. So I expect earnings per kilo to grow in all the quadrants that we have. But I think over this 7-year period, you will see a little bit what you saw last year. So now one of the drivers were technical products and feed. Maybe that will slow down, another one take over. And if you look at AAK a bit historically, that's been the case. Sometime we had special nutrition driving, and then CCF plateauing a bit. Now CCF, helping again over the last year. So I'm not overly afraid of that. I think it's just we have to be a bit realistic. There will be a bit dynamics playing in different industry, but again, we stand on many legs. If we have the same focus and drive internally, we will be in a position where we can capture it best way possible. I think that's how you should see it.
Perfect. Thank you.
Okay, we have a submitted question here from Per Jørgensen, INT Asset Management. 2 questions. If you have already answered some, you will have to repeat yourself maybe. Doubling the margin and volume at plus 4% means above 10% EBIT growth per year. So you are raising the bar, but you need more volume. Or is sourcing enough? Is the base 2022?
Great question from Per, and I hope that you listen out there. Know you well. So let's try to break it down. Is there enough volume out there? Yes, I think it is. So there are capabilities to source more volume, right? It's not a given, as you know, we're a multi-oil company, but in essence, there are opportunities to work with the yield per hectare in many of the supply chains that we have. And so volume is there, right? Is 22 the base? Well, let's call it, when we said doubling our EBIT per kilo, it's been a journey over a year. It was not including a low or weak Swedish krona. So see it more as a start of 2022, end of 2021 type of time frame. And purposely, we were not explicit to say 2.x or something like that per kilo, because we don't want it to be a new financial target, but we want to be crystal clear about our direction. We do see an opportunity to grow faster than our 10%. But again, 10% year-on-year EBIT growth is a bold target. It doesn't come for free, but our ambition is to outperform that. But when you look at it as a realistic financial target, then we stick with the 10% earnings growth per year.
And he has another question here. Is a transformational M&A transaction needed to reach 10%?
Not necessarily, but I also think if you ask me what's realistic, if you look at the next 7 years and we stand here 7 years from now on a capital markets day and we look back and say, did we deliver? And let's say we concluded that, yes, we delivered. And we then looked at what has happened. I would be surprised if we did not do any M&A, right? You can turn around and say, would it be difficult to reach this if you cannot materialize any of the M&A opportunities out there, any transformative type of action? And I think it would be very difficult. Only to driving this by organic growth and pushing your innovation and your price management, that's going to be difficult.
Okay.
So we need that kind of ingredient list to make it happen.
Anyone else? Okay, last question before the break. We mixed the questions that we also received before we started. So this one is, what does the competitive landscape look like? Also, what do you see as your peers?
Who I see as peers, right? So the competitive landscape hasn't changed dramatically, honestly, over time. So if you have followed us, it's the usual suspects, and by purpose, I don't like to speak about competitors by name. Know them well and try to have a tight dialogue with them. But if you follow us, you know who they are, right? So there are, if I describe the industry instead, you can say that AAK is still a unique player. We are a downstream player focused on high value-added oils and fats. There are no one that looks exactly like AAK. And that's one of our strengths. And of course, you could argue, could there be weaknesses? Some of our competitors are more vertically integrated, meaning that if you look at the supply chain I described, you have more upstream refining, even crushing, and some of them have their own plantation, be that in soya or palm or something else. So we look a bit different, and that is something we have to deal with. So in some instances, a competitor can have a bit of an upper hand on something, but in other situations, we have the upper hand. And that's pretty much what it looks like, I think. And we are going to continue to compete. And we know that some of them are chasing us. And that just reminds me about us having to live our purpose. We need to make better happen. Otherwise, they will catch up.
Thank you for that, Johan. Well, thank you also for your questions and online. Coffee break coming up. So far, so good. Johan, your reflections?
I think so. I am happy that we have questions, and I hope that you in the room and the audience that we have online is still there with us. There will be more to come. I'm looking forward to have Dheeraj on stage afterwards, addressing India, a growth opportunity for us, as well as a new acquisition. And after that, we'll have a fireside chat on a sustainable future.
Yes, and I remind you again, you can always submit questions even if we're not on stage, because we sort them out and bring them to the stage. I just want to say something before we leave the hall. During the break, we encourage you, of course, to visit the 3 booths in the foyer. There's plenty of goodies, so do not miss out. And Rebecca said especially the chocolates from the AAK Customer Innovation Center in Aarhus, Denmark.
Yes.
And
so you have the 3 booths out there with dear colleagues of ours, dying to present what we can do and display that to you. We also have team members here with Dheeraj from India, and Niall and Susanne and Tim and Thomas, Carl, other representatives from AAK. Don't hesitate to grab us, have a chat on anything, our strategy, our financial performance, or a sustainable future.
Yes, and we will be back at firmly 2:50. 2:50.
2:50, great.
Okay, thank you for now.